private equity investments in the insurance brokerage business is the best thing that's happened to the insurance brokerage business.
Today, my guest is the president and CEO of Oak Ridge Insurance, Robbie Smith. Robbie, great to see you today, buddy.
Thanks, Hal. Thanks for having me today. I really appreciate it.
Oh, well, you're more than welcome. I've been looking forward to this discussion. You and I have been working together now for the last several years, although I think we knew of each other in the past, because I think you dabbled a little bit in kind of what I'm doing, right, in your history, which I don't want to steal your thunder here. Certainly want to give you your chance to give everybody your background. But, we've had great success with you here at Oak Ridge in the last several years. And it's been quite a pleasure to watch and see how you've grown this business.
Thanks, Hal. Yeah, it's been a lot of fun. We're grateful to you and the whole Sika Fletcher team in bringing us opportunities. They have been, they've contributed meaningfully to the growth of Oak Ridge, especially over the course of the last couple of years. And we've enjoyed working with the entire team. So thanks for that.
Well, I'm sure the folks out there would love to hear about your background, your team, Oak Ridge, the strategy around it as one of the newer private equity backed brokers out there. It was super successful. Certainly with us, we really enjoy working with you. But I'm sure the folks out there would love to hear all about it.
Good. Well, thanks. Oak Ridge started January 1st of 2021 when 4 Georgia-based agencies came together. And these 4 agencies were dominant players in each of the communities they served. They had been part of a group called Georgia Agency Partners. So there was already very close friendships. There was a high level of trust. And they were friends and acquaintances of mine. And they did not like their perpetuation and succession options. They wanted to be able to do something that was unique and different. So they thought, let's put the 4 firms together. They asked me to come in and help consult through the process. I'll go back. My background started in 1987 with what was then Hales and Associates, now Dale & Hales, which became Reagan Consulting. I had the good pleasure of being in the consulting side of that business for the first 12 or 14 years of my career, and I really enjoyed the consulting side of the business, the valuation, the ownership, perpetuation planning, the producer hiring. Those businesses, like your business, Al, had become more of a investment banking kind of firm, and I certainly respect that. But I always enjoyed the consulting side. But what I learned through that was I love the agency business. I love the fact that these businesses were deeply rooted in the communities they served. They were major players in the business life and in the families in those communities, and I really fell in love with the agency business. So the 4 agencies that formed the nucleus of Oak Ridge shared that common goal of let's get together, let's create one company. So we call that the One Oak Ridge operating model, which is a fully integrated operating model from the same agency management system, which is applied Epic, the same instance, the same training processes and procedures, commonality around producer compensation. So everybody's on the same producer compensation plan. You can take that to the next level. We feel very strongly about our distributed equity model. So today, and I'll go through the full metrics of the business in a second, but roughly 40% of all of our colleagues have some equity stake in the business, and we feel very strongly about having that equity stake. We have a private equity partner. We are now on our second partner, which is Audax out of Boston. Our initial partner was Corsair Capital. They worked with us for the first 3 years of our operation. We took the business from zero to just over $90 million of revenue. We did our recap event 2.5 years ago. And today we are approaching, with deals under LOI, $200 million of revenue. The third part of these guiding principles, Al, was being specialized in our approaches. And we're a regional player, so we're only in the Southeast. And people say, well, are you going to expand outside the Southeast? And I say this, you and I have had this conversation. Why would we want to leave the Southeast? The business flow has been really great into the 8 or 9 states that are in the Southeast, inclusive of Florida. So we feel like being a regional player allows us to get to scale much more quickly than if we had a national platform. And then with that, we can really focus in our industry specialization. So we really define the business through that industry specialization around construction, habitational, coastal property, hospitality, and municipalities. Those are some of our big classes of business. The other significant one is ag, and we're a big ag player, both row crops, food processing. We actually have a small crop insurance offering that we have, but ag is the number one industry in the 8 states that we're in business in. So that's a quick overview of the business, Al. And we've been at it now for 5 years and 4 months as of today. We celebrate our 5-year, 4-month anniversary, and we're excited about how the business has grown.
Oh, I think you've done a fantastic job, and it's interesting how your strategy evolved. And when I first talked to you, it was the SEC states. Obviously everybody knows the SEC from college sports and so on and so forth. And I think you've done a great job, and you've stuck to your strategy. You've stayed with it, and you've attracted some very, very good, talented people. Some younger people, what were agency owners that have played a role in some of the development, staying alongside those niches. Thinking of the one gentleman we brought you on the life and health side, who's become a big partner, in the business and whatnot. But I think, Rob, you've done a really good job of getting noticed out there as someone who's definitely viable, a viable player, not just on the insurance side of the ball, but also in the M&A market. You've been someone that we look to as a go-to as now, and want to get you involved in as many of the transactions we have. And I know it's an evolution. I know you probably will get out of the Southeast at some point, based on opportunities as they arise, because that's how you're going to scale. But I think it's working for you, and you should be proud. You should be very proud of what you've done.
We had a very clear mission in terms of really in the formation of the business, and I was very fortunate, and that is those original firms and the principals of those firms who were still very involved in the both ownership and leadership of the business felt we had a real common mindset. So those founding shareholders around highly accountable operations, specialized product offerings. We think about the business in the 4 legs of our stool. We are 60% commercial property and casualty, with about 5% of that piece it being commercial surety. We've got a really great surety offering. We are about 22% personal lines and 18% employee benefits and life and health. Mm-hmm. We think that's a great foundation in the middle market communities we serve. You talk about the original code name we came up with, Project SEC, and our original private equity guys came and said, why would you name the code name Securities and Exchange Commission? And we said, you clearly don't understand Southern football.
That's right.
Otherwise, we have expanded into the ACC and a little bit into the Big 12. I'm happy to report. And today, with our 8 states, soon to be 9th state, we feel like having a dominant position in the Southeast. We would love to have a big presence in Texas. Texas is a very important state in this country. We'd like to have a big presence in Virginia. We think those are the 2 next places we'd like to be. We've made a meaningful investment in Florida. Florida is a really tough state to do business in because of as everybody knows, because of the coastal property piece. But today, right, Florida is our 3rd largest state in terms of premium writings and commission income, and we think it's a great place to continue to grow and expand into. Ultimately, we will go where the opportunities take us. But we really like having built the scale we have at the Southeast.
Well, I think it's good to have a focus. You got to be an opportunist, like you said, in many ways, shapes, and form, because, what I tell everybody is, the deals that we bring to the table, it pays to look at them because, there's ones that everybody was going to want, right? The jewels, right? And those are the ones that may be harder to win. So, you got to look at a lot to see, and, something that you might not suspect. And, a couple things, like even a few of the things we've done, were things like originally you were kind of unsure of, and then we brought it to the table. You like the people because, people buy people. That's the secret of the sauce of this stuff. But I think, you have a focus, you stick to your knitting, and it's worked for you. And I'm sure as you branch out, Texas, Virginia, those other areas, you'll continue to grow the business like you've been doing. So, I feel that you have become a presence in the marketplace. Certainly we feel that way, and we feel we've helped you in that respect a little bit more. And certainly these podcasts don't hurt anybody because everyone I'm doing them with, they're getting great traction. And this is a good tool for us too, because now when I show you a seller, Oakbridge, I have a reference point to go to, that they'll see the CEO talk about the business and get a good flavor before they even have the meeting. So these things are working out great. But Rob, how do you see yourself, Oakbridge sit in the marketplace, your middle market, like many of your competitors and many of these private equity growth strategies, back growth strategies? How do you see yourselves positioned? How do you see short-term, long-term? What do you see the future? There's been some things on the higher level with some of the bigger firms as they came out to, recapitalize again. And they kind of got, I think, hamstrung a little bit and surprised by, how some of the investors treated the market. You're still very good size at 200 million that you're going to be able to continue doing this with one sponsor. But what do you see the future, for Oakbridge, and what do you see, today's M&A market, how you compete against some of the better competitors?
Yeah, thanks, Al, for the question, and it's a great question. We want to be viewed in the marketplace as a strong operator who happens to do some M&A for the purpose of specialization, scale, or in order to access people that you could otherwise not get access to. We do not want to be viewed, and hopefully we're not viewed, as just a pure revenue aggregator. Evidenced by the fact that we integrate as we go. We put everybody on the beginning as quickly as possible around our agency management systems, our compensation arrangements, payroll benefits, and the like. I would say that our data quality and data integrity, even as a firm that's relatively new, we're very proud of it. And we think that's very important. So how do we want to be positioned? Number one is we want to be viewed as a very strong operator that is taking a long-term approach to the business. The second thing is I think about my days either as in the consulting business or in running insurance agencies. What is the strength of the local agent? The strength of the local agent is relationships. Those relationships are people that, I grew up with, you grew up in the communities, clubs, churches, high schools, colleges. That's the strength of the local agent. What are the strength of the big brokers? The strength of the big brokers are resources. And having worked for the world's largest broker for a period of time, I can tell you those resources are real, they're powerful, and when they are properly applied, to a client, they can make a profoundly positive impact on the overall buying experience or insurance and risk management experience for that client. We all compete in this relationship to resource continuum. We want to always be relationship focused as a business. And we do that through our community involvement, the relationships we have with the buyers, the specializations that we bring to the table that put us in a lot of trade associations, affinity groups, and the like. But we have to marry in these resources. And what are those resources? On the P&C side, it's claims, safety, loss control, risk mitigation, alternative risk, captive management. Those are the things that as clients move through their evolution, they need to make sure that they don't outgrow what our capabilities are in being their insurance broker. On the benefit side, it's enrollment and compliance and benefits administration and member services. It's the things that really differentiate the large broker from the local transactional broker. So we want to achieve that trusted advisor status in the eyes of our client. They can take that from, that privately held business through their own perpetuation and succession, whether it's with a family business, whether it's selling to a larger competitor, whether it's their own private equity investment that they have in the business. And that's how we want to be viewed in the bigger insurance community.
Well, I think, as the world continues to change, including insurance brokerage, integration is a must. So I think you're really smart to start out with integration, because a lot of your competitors, especially the ones that started with the private equity backed capital, initially were, really decentralized, and they got to certain sizes, and when the market now calls for integration, and it's harder to integrate when you get to a certain size already. So I think you've been very smart with that. But it is the balance, right? Because you're attracting these models that, the industry's full of entrepreneurs, right? That's what your industry is. So it's a balance, because you're attracting these entrepreneurs, and integration always, was a little bit of a bad word to people that were joining these things, because right away they feel like they're becoming more corporate. So the balance is to keep that entrepreneurial spirit, okay, along with all the things you need to do to be successful, to integrate, put the systems in, the resources, all those things that really help a lot of these entrepreneurs, continue to grow their business. And I think, Rob, for the most part, what I see, you've done that. I think you've done that, and you've done it successfully. It gets harder when it gets bigger, right?
Yep.
Because you got to do more things. And, talking to people, they said, hey, well, 5 years ago when I was this size, I never had worries about licensing in different states or whatnot. Now I get an inquiry every day, okay?
Right.
When you get to a certain size. So there is growing pains with it.
Yep.
But I think you guys have been very consistent, and very well put together from what I see.
Well, we think so, Al. Obviously, I am simultaneously our biggest fan and our biggest critic. So I have the good fortune of getting to see the entire playing field. But I am a fan of what we're doing. I think back in, I think it was July of 2021, we were 6 or 7 months into the business. We had gone through an extensive integration process with our first 4 firms. We had done 3 new partnerships by July of 2021, and we were having a planning meeting, and I wrote at the top of the sheet, integration, is it worth the effort? Question. And I began our planning session and with that question to our leadership group, because we were dealing with all of the pain and suffering of standardizing processes and procedures. We spent 2 or 3 hours talking about, was it worth it? We think it was. Clearly, the marketplace, then I think there was still a question mark as to whether it was worth it. The marketplace has since spoken and said, you better integrate if you really want to build the business. By the way, it helps us a great deal also as we're talking to prospective new partners, because we now we can look at them and say, look, if you join us, we're going to work very hard to preserve that entrepreneurial spirit, that community involvement, the things that you're doing in order to be a great member of your community. But we also recognize that the standardization of back office functions that will create efficiency, that will create time in people's day in order to help them go sell more insurance and be more client facing and more prospect facing and less internal operations facing, is important. And people who want to be internal facing, we need those people. But salespeople want to be taking care of clients. They want to be out in front of their prospects. They want to be generating new business. And we think our model creates capacity in their day so that they can go do the things that they love to do and not have to worry about the audit or their licensing or the other things that are inevitable in the life of an insurance agent.
Right. You take away all the mundane stuff so these people can block and tackle. It's growing the business, selling and servicing. And that's the key to these models. And and you got to be able to grow organically, right? That's the key. Yep. Integration, organic growth, right? Stability in the leadership. These are what new investors look for. And obviously you have your second private equity partner, as you said, Nordex, and you've had them now for a couple of years, Rob?
2.5 years.
2.5 years. So 2.5 years. So, the life of these things usually used to be you could set your watch by 5 years. Then when things got really hot, when the interest rates were real low, we were recapping a few of these things in 3 years, okay, and whatnot. But, how do you see that trending in the market now? Because a lot of people are seeing the investors the investments that people are making, kind of shifting a little bit. It's not so much, is it going to be able to continue to triple and quadruple your money, every 3 to 4 to 5 years on this equity that, that's really the secret sauce where you're promising these people when they join you, because they're all shareholders. That's the beauty of the model, is everyone's aligned with those. That helps everyone work together, right? Everyone's rowing the same boat. How do you see it, Rob? Do you see a kind of a shift in the private equity model that's going on right now?
Yeah, and my perspective is relatively short in terms of this iteration, but in terms of recognizing what needs to be done in order to build the business around, what's happened, respectfully to the Seeker Fletchers of the world, you guys have created a very efficient market from a valuation standpoint. So the notion of a multiple arbitrage between as the mechanism to create meaningful shareholder value is not what it was maybe 5, 10, 15 years ago. We have to grow the business. We have to grow the business organically. We have to maintain and expand margins. We have to create tools, resources, and capabilities for those producers and salespeople in our organization to be meaningfully more effective on a go-forward basis than they have been in the past. That's the only means by which we can create a return for all of our shareholders. Now, we're fortunate that we have our business is equally balanced. Our private equity partner, Audax, owns roughly 50% of the business. We have 250 employee shareholders who own the other 50% of the business. We think that's a really great balance. And by the way, so that everyone will know my bias, I think private equity investments in the insurance brokerage business is the best thing that's happened to the insurance brokerage business
I agree.
in my career. There's going to be some people out there. Why do I say that? Well, number one, it forces a level of discipline in running the business that simply does not exist inside of a lot of privately owned businesses. It forces you to really address issues of organic growth and margin and carrier relationships and expense controls and succession planning and all the things that's very easy to kick the can on in a privately owned business. Why is it better than the large broker business? Again, these are my biases, with great respect to the big brokers, is that it creates that both income and equity model for not only what I think of as the last generation, the people who are selling their business into a private equity model, but for the current generation and the next generation. We're creating wealth creation opportunities for people who are 28, 29, 30, because they are able to earn equity with growth in their books of business over time. They're able to purchase equity. They're able to participate in a leadership and management team of a business that is creating outsized growth in the marketplace. So, I think of our constituency internally in a lot of different ways. Well, one of which is, do I have a value proposition for the last generation? The last generation are generally the sellers, and that's oftentimes around valuation. What's the generation for the current generation? That's around both income and equity. I want to make sure that I have an opportunity to accumulate meaningful equity, because that's going to be my primary wealth creation opportunity. But I also need to make money. I need to have good commission rates on side of the business. And then the next generation is that if we're able to go to these young people, 28, 30, 32 years old, who are gifted in this business and say, you join us, you follow our processes, you buy into what we're teaching you to do. In 10, 15 years, you'll be making hundreds of thousands of dollars, and you will be owning millions of dollars worth of equity in the business. We think that that's what private equity does for the insurance brokerage business.
100%. Can't agree with you more. Changed the whole industry, really.
It really has.
Even though private equity had been around, I think Eddie Bowler of USI, was on one of these podcasts with me. They had the first private equity offering in like 1993 or something like that.
Yeah.
And I referenced a deal we were involved in 2006, when really nobody was really doing it. But in the last 13 to 14 years, it's been the darling of the industry of the private equities. They love it. It's recession proof. You need most of the products by law, the high margins, the residuals. So they love investing in this, and I think it's it's been very interesting to watch it evolve. And obviously, we've had our hands in a lot of it, as you know. We put together a lot of it, brought the money into a lot of it, and also invested alongside some of the ones we brought in. And we're very open about that, very transparent, because we want people to know when we have a seller, when we go down our list of recommendations, they're told right from day one, the ones that we invested in, and it's their choice, okay, if they choose one of these firms. But, we've been fortunate enough to get involved in all that stuff. But yeah, I think it's a big part of it. I think the people that have shied away from private equity, it's not helped them as much as it might have hurt them. And the old cliche, private equity, it's really not their money, right? It's they're managing a fund for, very wealthy people, so they don't want to make mistakes, and they're looking at it. And even though they don't run the business, the day-to-day operational business, they have a big seat at the table, and they certainly, he who has the cash is king, right? So they have a big say and a lot of governing rights. So it's a good balance. You have to have a good relationship, and you have to, you got to be able to have a private equity that is going to be willing to, follow you, listen to you, but you have to earn that trust, right? It takes time.
Well, along that line, I think that's the beauty of the partnership, when there is understanding and alignment between our objectives as the operating people and their objectives as financial people. And to a certain degree, private equity is a source of capital that is seeking a return on that capital, and our job is to provide that return on capital. By the way, if I had a shareholder sitting over in the corner who was a producer or whatever, he or she would also be looking for a return on that capital. What I've learned, and this is what has been fun about the business, is that it creates a sense of intensity that is a lot of fun to work with. And what I mean by that is we think every day about how to enhance our organic growth, how to hire new producers, how to create a differentiated value proposition. Where is we had a call this morning. What is the next investment that we're going to make in our Plus One services, which is our claim safety and risk management, that is going to have the most meaningful impact on helping our producers write those next accounts or to provide a resource to an existing account? It's a really fun strategic discussion to have, because the scoreboard is clear. You understand what the objectives are. By the way, if you get in business with somebody that has different objectives, you're going to have, that they're going to aggregate and flip. Then you've got another, that's another issue. We're not in business with somebody like that, but we screened for that. But this is not for the faint of heart. It is, but I think it's a top fun.
Yeah, no. Listen, I endorse it strongly. We're big pro private equity. I totally respect the larger public brokers. I had Pat Gallagher on a couple of weeks ago, just a first class guy, and built a hell of a business. And he's very candid about where he thinks a lot of it's going, and a lot of it's a cycle, right? For years before the last 13 years, it was the Browns and the Gallaghers and the Marsh agencies, the Hubs, the USIs doing them, and Hub they're still all very active.
Right.
But a lot of the transactions were going that way, and then the Acrisures and the Assured Partners and so on and so forth evolved, the risk strategies, and here it comes. And now there's about 50 of you guys out there that have private equity behind them, and it's really what's driven the M&A activity in the last 13, 14 years.
Yeah.
So Rob, a lot of the things that are surrounding the world these days, and certainly in this industry is the technology right around it. It's this big push on AI right now. I asked Pat Gallagher the same question, what he thought. How do you see AI playing into insurance brokerage, and do you see it more as an asset or a threat?
I see it as a huge asset to us. We see it already in terms of process efficiency. So our AI initiatives a year or 18 months ago were really focused on process efficiency. A lot of accounting, finance, back office functions, direct bill reconciliation kinds of things. but they were not client-facing issues. Increasingly, they are becoming client-facing issues, and then I will tell you iteration number 3 in a second, and that is around coverage comparisons, proposals, the ability to do things that candidly would have been a 3 or 4 hour project even 2 or 3 years ago is now a 5 or 10 minute project that then needs to be edited and cleaned up. But AI has had a profoundly positive impact on both the quality, quantity, and timeliness of our ability to produce client-facing documents. The third piece, and one where we are starting to really move into, is what I refer to as the sales-enabled AI. Those things where we are using the information that's out there and we're able to carve a better outcome for prospects. We're able to be more efficient in our internal sales process, where we're increasing our hit ratios, we're increasing our average account size. We're doing things that is putting our salespeople in a better position to grow their income because they have access to data in a more timely fashion. So back office functions, client-facing functions, and now prospect-facing functions is the full cycle. Now, the question becomes is how do you measure it? We can see increases in our margin due to the efficiency. We've never had any type of layoffs in that regard, but we're able to grow the business, and we've seen a material impact on our revenue per employee because we're able to create efficiencies using these AI tools. Increasingly, we think we're seeing some increases in organic growth rates due to a little bit higher organic growth rates, higher hit ratios, more efficiency in our sales process. Clearly, our retention rates, which have always been very high, continue to be very high. So it's hard to really measure the retention side of it, but we are seeing the real impact of AI on the revenue side and on the expense side of the equation.
Yeah, I never can quite understand why anyone thinks any form of technology could take over or be a threat to this business that is so relationship driven. It's mind boggling, and that's kind of put a charge in what's going on in the world with the larger brokers right now, or the publics. As their valuations have come down. A lot of it's around this threat of AI, and I couldn't agree with you more. And like I said, Pat Gallagher said the same thing. He doesn't see it as a threat at all. They see it as a tool for to become more efficient in a lot of ways. So, I just wanted your opinion on that, but it's pretty consistent, I think, through and through. I don't think in my 38 years of doing this, I've ever thought that any kind of technology would take over the insurance brokerage space in any way, shape, or form, and it really hasn't.
Well, clients, especially sophisticated clients, need advice and counsel. There is an element of our business that is highly transactional. People need an insurance policy. They buy a policy. We issue the policy, issue certificates, whatever. We don't necessarily have that trusted advisor, consultant status in their eyes. That's certainly what we see. And I think in certain classes of business that are highly transactional, maybe those classes have a bullseye on them to a certain degree, but we feel like that in terms of the role of the brokerage that we aspire to be, we feel like it's only going to benefit us. It doesn't represent a threat to us.
So, Rob, as you continue to evolve with Oakbridge, and I know there's some new and exciting things going on internally there that I know you like to speak to. I'm sure the folks would like to hear. Maybe you want to get into that a little bit.
Yeah, thanks for that, Al. Yes, so we recently announced our internal succession plan. I've had the good fortune since the inception of the company of carrying the three titles: chairman, president, and CEO, which is somewhat laughable when my team hears that. They know I've had the title, but my primary partner over the last 5 years and 4 months, and one of the founding shareholders, Matt James, effective July 1st, who has been our chief financial officer and leader of our M&A activity. Matt is actually moving into the CEO role. Trey Vaughn, who is one of our senior producers, who has a really large, sizable book of business that happens to be focused on construction and real estate, is moving into the president's role inside the business. And that gives us an opportunity to really to officially expand our leadership team We had about a year and a quarter ago brought on a new chief operating officer, John Ledyard, who has done amazing work for us around data and around organizational governance. And we've watched the work that we've done around our data, which now genuinely informs every decision that we make, and around our organizational governance to create efficiency in the decision-making process. But between Matt and Trey and John, the first two are 42 years old. John is 37 years old. We've established the next generation of leadership in our business in terms of who's going to be running this business 5, 10, 15 years down the road. We think that's essential as we cater to the last generation, current generation, and next generation of people that we're trying to attract to the business. What's going to happen to that business in 5 years, in 10 years? And we think that that being able to say, look, the plan that we have now for these periodic recap events that create an opportunity for people to perhaps pull some chips off the table, or perhaps leave their chips on the table. Give us an opportunity to reset the cap table to make sure that we are rewarding the right people in terms of their activities is essential to building a permanent business. So I'm excited. Matt and Trey have been part of this decision-making body for a long time. Matt was here from the beginning. Trey's been on our board for the last 2.5 years, so it's no mystery that those two guys, along with John, represent the next generation of leadership of this firm. But we've made it official, and I'm very excited about that. By the way, I'm not going anywhere. I'm moving into an executive chairman role, and I'm going to be spending a lot of my time on M&A activities and corporate development activities.
No, I think it's fantastic. I think it's exactly how you build a business. I'm doing the same thing. We're doing the same thing ourselves. Yeah. Trying to position. You're not going to keep good young people if you don't give them a chance to elevate, right? And that's what they're in it for. And I think they're terrific guys. Certainly know Matt well, John and Trey, terrific guys. You got a real good team there, and I think it's a really good move. And they're always trying to move us older guys out of the picture anyway, Rob. So it's not so easy though, right?
It's not easy. We still have game left. But Al, I think about it. I know you're a baseball guy. I'm a baseball guy. The reality of is there a salary cap? You think about salary cap, and when the guys who are no longer I'm still contributing. I'm working hard, but we've got to create roster room for this next generation of leaders. And by the way, one of the things that I saw in my prior life, whether it was on the consulting side or in some really great brokerage firms, the willingness of the people who built the business to move aside and let the next generation take it to the next level is essential. And my level of confidence in these guys' ability to take this business to the next level is substantially higher than my confidence in my ability to take it to the next level. I'm happy to give them the opportunity and the room to run. And it's going to be an exciting 5-year run ahead of us.
Well, listen, you've done fantastic your first 5 years. We're very fortunate to, be working with you, and, hopefully we'll be involved in your continued success, with yourself and the young leaders, Matt, et cetera. But I thought this was terrific, Rob. I pretty much covered, what I wanted today. Is there any other thing you would like to cover before we wrap?
Al, thanks for the opportunity to tell the Oak Ridge story. Thank you for your our relationship has always been your advocacy for your clients, so those Saturday morning phone calls that you and I have when there's always a little bit of deal friction, I never look forward to them, but I always appreciate your advocacy for the clients. And I'm, what I really enjoy is talking to those folks who join us. And today we're celebrating the third year anniversary of a very important firm that joined us in North Carolina. And the gratification of getting the email saying, we love Oak Ridge, we love what we're doing, and that's what warms my heart. And thank you for the opportunities you brought to us. I'm sure we will continue to have those Saturday morning calls. I will always look forward to them mostly.
Right. Listen, it's all in good faith, right? It's about getting it done. Like I tell people, in our position, you get to a point where you're really representing the deal getting done.
That's right.
Yes, you got to be a good advocate for your clients always. We always have their back, but we realize that, it's a two-way street. And why we've been so successful is because it's about managing people and process.
Yep.
And it's the numbers are the numbers, as they say. And, these are private businesses, most of them. You can get creative on how you get the deal put together, but, managing the people and the process is the key. And, you're always very receptive in how we do that. And, we've had to do some things on every deal and with every firm that, to make these deals work. But none of them are easy. And I appreciate all the things we've done. You've been a great partner to us, and we will continue to be. And I thank you for doing this today. It was terrific.
My pleasure. Thanks for having me, Al.
Take care.
For more information about your unique situation, please contact Sika Fletcher or visit us at www.sikafletcher.com. All opinions expressed by the host and guests are their own and are not necessarily those of Sika Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sika Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sika Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others.